So anyway, let's move on and let's quickly cover this week in trading history, Kev. And
Well, it's that time of year, right, Patrick?
it's that time of year, the middle of October, and it's kind of a cruddy that we covered it last week a bit when we talked about George Soros in the tale, right? But
Right.
it was still a great tale. But it was on October 19th, which is we're recording on the 18th, so it was we're one day ahead here of 1987 was the infamous market crash, and it was like for most traders in today on Wall Street, many of them weren't even born during the 87 crash. I was just riding at 10 speed in my parents' driveway, which
Yeah, but
when this
Patrick,
thing
you
happened.
were 32 at that time, so
Anyway, but the 87 crash was something special. And you know what? I think to start off the mood, let's play a quick excerpt I created for that has a little bit of Paul Tudor Jones on the floor of the exchange during the 87 crash day. So let's watch it.
Good afternoon, everybody. We welcome you to our Monday edition of Market Wrap, an historic day, obviously, as we've been telling you all day today. If you have been away from your television set and haven't heard about the stock market, this was it. We have exceeded the percentage drops that we saw in 1929. Point-wise, this, of course, is a record as well. Volume-wise, records across the board as we saw the tremendous selling that we experienced last week hit the trading floor once again today. And how? First, let's go to the American Exchange live, where there's a tremendous amount of selling there as well today, where we have futures trader Paul Tudor Jones, the president of Tudor Investment. Paul, can you hear me okay?
I can hear you, Bill.
Okay.
I'm not sure I want to, but I can.
Yeah, I can imagine, buddy. All right, give it to me straight, Doc. What, in your view, is going on?
I think that we've got a market that has been seriously overvalued for some time. I think that what we've witnessed the past couple of days has obviously been the piercing of this bubble. And I think that what you saw today and what you may see tomorrow morning will be the culmination of this selling climax for now. And I emphasize for now.
Now, you had told me a few weeks ago that you were looking for a drop. Did you expect it to be this precipitous, this quick?
No. We thought the market would be under pressure through October. We thought it'd go to the low 2200s. But we thought you'd see this kind of a break sometime early next year. But quite apparently, the market's doing exactly what it always does, and that's fooling 99.9% of the people. And that's why it's happening now. I would say Wall Street uniformly was unprepared for this magnitude of a drop. And, of course, that's why you got it, because that is the nature of the market.
Yeah.
So, Kev, now we've in the past referenced or talked about it. I actually want to kind of live through what was going on in the 87 crash, right? I mean, this was when portable phones came with a box that you had to wear around with like a purse. And at the time, computers were all these little like digital, like all the ASCII star stuff all over the screens, right?
right.
It was a crazy.
It's a long time ago. It was a long time ago.
And the S&P 500 at the time was actually 1/10 of what it was today. I mean, it was at the pretty much near the 300 level when today it's at 3,000. And so when we're talking about price levels, it's important to put into context, shave a zero off of it, right? Or add a zero onto it to kind of put it in today's context. But it was back then, from a Dow perspective, it was a 500-point drop in one day, 22%. And what I wanted to talk about first was just what happened that day. And so I have an intraday chart. And so it started off on the Friday before, because it happened on a Monday. And that Friday, the stock market, the S&P 500 dropped from more or less around the 300 level down to about, I'm rounding, about 280. So it was a solid, 6% drop in the stock market in one day. I mean, today,
so
if that happened,
we're taping. Yeah, so if we're taping this Friday afternoon, it's the S&P looks like it's getting pinned to 3,000. So that would be like this being off 180 points.
Right, something like that, right? About 180 points, just a solid wipeout, and then comes Monday. And so right off the bat, Monday morning during the crash, it starts off around 280 on the S&P and wipes out by 11 o'clock in the morning to about 260. So wiping out what would be the equivalent of about 200 S&P points today in about an hour and a half from the open.
Right.
For most people, that's an oversold condition that flags a buy, right? Like, I mean, wiping out 200, if we saw today a 200-point drop and then another 200-point drop the next day, most people would be buying the dip pretty quickly. And it did offer the first reaction. And so we had the first retracement between 11 to 12 o'clock, about an hour. And and the market retraced from about, let's say, the 260 level, I'm rounding obviously, to almost to 270. And so you got a pretty good bounce, and then came lunchtime, and then it wiped another 200, just going from the 265 kind of level to about 245 in a span of just over an hour and a half.
Right.
So another big leg lower, just shellacking the market. Then it gets a little bit of a 230 kick, just popping what was a minuscule little rally that lasted maybe 10 points in about 15, 20 minutes of time. And then they slam it into the close with it going from like 245 all the way down to like 225. Another 200 or another 20 S&P point drop, which would be another equivalent of another 200 S&P points in the final hour. And so it was just a complete wipeout, just a day where the high was the morning open and the low was the close at 4 p.m., right?
Yeah.
And
it's just ugly.
It was very ugly. And what's interesting is that it then bounced 20 S&P points, so about the equivalent of 200 points, right on the open the following Tuesday, and then gets slammed, making even lower lows by lunchtime, and that became the low of the move. So it had one more kind of intraday sell-off the next day that kind of solidified the low print, and then it kind of created the big counter trend retracement that began there. But it was a 20% wipeout in one day.
Do you know what I think is interesting, Patrick, is that Paul Tudor Jones, you played the video earlier, he talked about the fact that many people were trying to demonize anybody who had predicted it and who had gotten short. And I remember in the Market Wizards book, he talked about the fact that he was actually spooked by the level of officials that called him regarding his positions. Mm-hmm. And he was, there we go. You're too busy drinking your Caesar there. Yeah. I could hear it. But what I is actually, and that just goes to show you that when the shit hits the fan and people are basically looking for a scapegoat, he realized very quickly that someone who had profited handsomely from it doesn't want to be bragging about it. And I think that's a very interesting part of that whole phenomenon, because you go look at the Market Wizards book, he goes on in length and talks about the fact that he was scared and spooked by the fact that these officials of such high level kind of within the administration were calling him up.
That's right. Anyway, all right, so Kev, let's move on.